What do you make of where crude prices are right now? I think the IEA in its most recent report said the oil market will drown in oversupply.
We have more production supply coming than the demand of oil, and as a result of first US shale oil came very strongly, followed by Iraq production growth, and this was more or less compensated by the demand growth, but recently demand growth weakened, and on top of that we have now Iran coming to the market and bringing a lot of new barrels to the market. In the past, when there was a geopolitical tension in the Middle East, prices went up. Now that the geopolitical tension in the Middle East brings the prices down, a very rare issue. Throughout 2016, downward pressure on the prices, but next year we may well see a rebound in the prices, and further down the road, and this is an important issue that countries like India may want to take note, in 2015 global oil investments declined more than 20% for the new projects. 2016 another 16% decline, so which means that in a few years of time, when the demand grows strongly, we may well see that there may not be enough oil to meet that demand growth, and this may well push strong upward pressure on the prices.
I have with me one of the most influential voices on energy, Daniel Yergin, Vice Chairman, IHS. We broke through 30, we broke through 28, and now we have Iran in the mix saying it could potentially pump 500,000 barrels per day.
What Iran can do and what Iran does do, if it puts out the type of barrels that we've been talking about in the higher numbers, then that will just be, particularly at this time of year, will just add to the downward pressure on prices. So I think for the next few weeks, the oil market is going to be looking very carefully and trying to calibrate exactly what is Iran doing and what is it capable of doing. But I think for this quarter and into the next quarter, we're in a period of low oil prices.
Okay, when you say low, how low? There are some estimates that put crude oil prices at $10 later this year.
Well, when we saw oil go to 10 in 1999 and 1986, it was because they ran out of storage. At this point at IHS, we don't see the world running out of storage. If it does, then you would get those much lower prices. But it looks like we're in this sort of $25, $35 range. But so much depends upon what happens with Iran. And the other big question that is weighing so heavily on the oil market right now is the slowdown in China. And there the question is, how slow?
And that's an answer nobody has so far.
No, China just came out with growth numbers which were about
6.9%.
which were the lowest in a quarter century. People are expecting maybe there'll be a stimulus and so forth. So the question about China is it just making a transition from one kind of economy to another, or are there really structural problems there that are going to mean a slower China, and a slower China affects the whole world because the weight that China now has in the world economy.
Okay, I'm interested in knowing what these lower crude oil prices have done to the shale competition, and whether we are going to see some decimation of American capacity, which would eventually in 6 to 8 months mean that OPEC can then sort of cut back on supply maybe.
Well, I think that is one of the other questions. People have been expecting U.S. shale to go down more quickly than it has. It's turned out to be more resilient because it's been more efficient, because producers are more focused. But at these price levels, it is very, very difficult. And a lot of these companies carry a lot of debt. So we think that probably by sort of mid-late spring, we'll see U.S. oil production maybe about 1 million barrels a day lower than it had been last spring. And if prices remain in this level, you're not going to see the investment to maintain production.
I think where large companies are already taking big write-downs on some of their shale products.
Both a combination of write-downs going on, and you see the companies are cutting their budgets, they're cutting their expenditures, they're cutting employment, and sort of hunkering down for a period of lower oil prices.
Okay. What does this mean for the push towards renewable energy for many countries like India that are now very, very focused on pushing out bigger capacities in solar, etc.? If crude oil prices stay at 20 to 25, will renewable energy be viable?
Well, renewable electricity, solar and wind, don't really, in many parts of the world, compete with oil. They do compete with natural gas. They do compete with coal. And so if you have those low prices, and many natural gas prices around the world are linked to oil prices, that means that it is a tougher competitive environment for renewables. A lot of the thinking, for instance, Germany made this big campaign to push renewables, but it was based upon assumptions that oil prices would be very high. So this does add to the pressure. It also, at the same time, this uncertainty in the world economy and the weakness in the world economy makes also just generally investment more difficult. So this is not good news for renewables, but on the other hand, there's a strong policy commitment in India and many other countries to continue to push renewables.